Boom. Yo, what's up, everybody? So, what's going on? Pump down. So, I'm realizing that my last video update was public. So, I'm going to complete today's video with a public update just to flex some bragging rights. Also, to show you that it's not hocus pocus, it's actually pretty dang controlled in where it wants to go. So, we're focused on this candle here. Okay, so yesterday's update, I had a bearish bias unless we took that high. So I wanted to see price action trade down today. Check that out. Pretty cool, right? So let's figure out what happened. Well, it came up to a specific price point that we like to see. And then intraday, it actually came down to the body. It finished the job later on, but we'll talk about that. What's up, buddy? Hey, man. What's up? Yo. Welcome. So, we'll be investigating that puppy there. So, there wasn't any news driver today. No, that's the open of the candle, but I'm going to refine that and use midnight. I'm also going to jump into the 1 minute chart because this was exactly what I wanted to happen yesterday. So we had this new week opening gap on here, and if you remember, and you can go back in the video yesterday, I was mentioning I wanted to see this gap midway point here, SR flipped, and then start trading for sell side liquidity. Our midnight opens up, we SR flip the midway point of that gap, and we start running for sell side liquidity. We trade up for a little bit, dangle around in New York, and then wham! Right down to that candlestick in the daily time frame. So I gotta stretch that out a bit. It's that guy right there. Paint it black. Okay, so that's that SR flip here. It comes up for New York. It's the 786 retracement. Swing high in a premium market. This was rough. This was very rough. Today during the live, it wasn't quite obvious to me if it wanted to run out this trend line and maybe dab this one more time, sweeping that buy side pool and hitting this candle with no wick on there. That's kind of what I was looking for. So if you remember in the live when we first started, I was looking for something like this, right? So it didn't want to do that. And then when 2 p.m. came and the model presented itself, then it was obvious that it was going to start running. So that's just what we were waiting for. We were sitting there waiting all afternoon for the information. We got it. We called it. And there it went. So that's kind of what we're... the nuts and bolts to what we do. So even though you be using the body for an exit, you're paying attention to the close. It's really important you measure the close. Now you can use the settlement or not. I don't really like to, but you can. So right here, so we did not close below the midway point. It wasn't until after the open that we started to make this extra dip here. So this is the beginning of our algorithmic day, midnight here. And then this is the end of the trading day. Our end of our algorithmic day is 4 p.m. But it's really where this candle closes that we want to pay attention to. So that's that price point there. So that would be above mean threshold. Showing, I don't know, it's kind of weak, but it's kind of, could come back up maybe. So let's figure it out. My trade today was not a short. It was just a really quick long, mostly because London did this big giant move here. So it was obvious that it wanted to come up into a premium, and how it got there became obvious. It's this candle here that I bought, and I just took it up to here, and that was it. Oh, I wasn't holding for anything magical. I didn't leave a runner. So what are we looking at here? I'm bearish, man. I'm bearish based on the swing high in the premium retracement after a shift in structure. I'm bearish. Okay, so what am I aiming for first? Assuming we start selling off tomorrow and then into the rest of the week, this will have this new week opening gap on your chart right there. We're going to need to SR flip that in the daily time frame. So this afternoon I was with you guys and I was showing you how to measure order flow in that order block on the day. That's how we're going to do it on the week. And then we'll aim for this, which is mean threshold of this order block here. It's a proper order block too. Like, you'd think it would be ripping by now, but it's not. And it could. There's a chance it could. Okay. So that's about it. That's the only thing I really see important moving forward. You can see that price action just does not want to get above that order block. So, I want to see NASDAQ and Bitcoin decouple. They did that today. One went down and one went up. So that was cool. I mean, Bitcoin came back down after, but looked like all day they were doing the opposite. So that was neat. So overall, I want to see it down here as long as that holds. So did we make a wick for the week already? I would like to think so. Even if we do come back up into that rejection block, I wouldn't want to see this week trade back above there. If we do, likely coming up here. More likely here, but that's what I'll be aiming for. If we start trading back up above here, that's what I'll be aiming for there. And why is that? Because we're above this new week opening gap and inside of this fair value gap here. So this is where price could want to start freaking out from. It can come and visit this again and still be extremely bullish. So just something to think about. You can always have a bias, but you gotta have a backup plan too. So tomorrow, I don't think we have squat for folders. We have a couple of members speaking. It's probably not going to be super duper. It's looking like our real good days are the end of the week, which would be really sweet. So don't let price action piss you off. If you're in a swing trade, just let it bake. Don't worry about no retracements. And keep it real, you guys. Mind your risk, and we'll see you tomorrow. God bless you guys. Peace out.